Well, hello everyone. Welcome to the webinar. We are going to talk about opportunity products, and we are going to go through some of the benefits of using what I think is an essential feature of opportunity products. Some of the essential benefits, I think it's an essential feature of Salesforce. I do know that there are some people on the webinar who I know don't use products with opportunities at the moment. So by the end of the webinar, I really hope you will understand how they work and why you should be using products with opportunities. For all of the people that are on the webinar that already use opportunity products, we plan to show you some of the additional ways that you can generate benefits from this feature in Salesforce. So I'm your host, Gary Smith. I'm delighted to say that about 8 inches away from me is Nick Ambrose. Nick is one of our senior consultants. So yeah, thanks for helping me out, Nick.
That's all right. Good afternoon.
And I guess it'd be good morning, actually. Robby, you are about 8,000 miles away from me in Charlotte, in North Carolina. Robby Johnson, can you hear me?
Yes, I can. Can you guys hear me okay?
Yeah, loud and clear. Thanks for joining us, Robby. Robby is heads up the Salesforce system for quite a large implementation at Ellison Technologies, and is a big user of products and price books in Salesforce. I'm delighted that Robby can join us. In fact, Robby, do you want to just take a moment just to just introduce yourself and just give us a few moments worth of background about your company and what you do and so on.
Sure. My name is Robby Johnson. I work with Ellison Technologies. I've been at the original company that Ellison purchased since '97, and we are a machine tool distributor. So we sell the CNC metal cutting machines, and we went on Salesforce. My group went on Salesforce back in 2012, I believe. Ellison has been on Salesforce maybe a few years before that. But, you know, I'm responsible for the Salesforce org. We have about 300 users. Probably a third is sales, a third would be service, and then maybe a third, you know, admin support type users.
Yeah. And you are a big user of, how many products would you have in your system?
We have, as far as the machines we sell, there's probably 180, 190 different machine models, and then each machine can have, you know, 40, 50 options. So, you know, we've got a few thousand product records.
Yeah. Okay, perfect. Well, that's absolutely perfect, because it's great to get the insight from an actual user. Nick and I will go through some of the demo and so on, and we'll get input from Robby as we go along. So the way that we're going to structure the webinar is we title it, you know, 10 benefits that from using opportunity products. Well, these are the 10 benefits. I'm not going to skim through each one now, but it's really about increasing usability of the system. It's about increasing forecasting accuracy. It's increasing revenue forecasting. It's about perhaps tracking revenue over time. It might be about streamlining processes, speeding up deals. It might be about fulfillment, and it might also be about selling more through product bundles and so on. So a whole stack of benefits that you can get through using products on opportunities. So we're going to go at a reasonable pace. We are recording the webinar, and we will publish a blog post on Friday morning UK time, and we will include a recording of the webinar there and a lot more text and background that you can refer to subsequently as well. But let me just focus on that first one, the usability and the way of driving adoption. Because this is a screenshot I took literally on Thursday, so 3 or 4 days ago. This is from a new customer that we have just acquired, and actually I couldn't get the screenshot, the full screenshot of the full opportunity in all of the fields on there. I couldn't get it in a legible way to fit on the screen. This is part of it, and what they've done is very typical. what they've done is they've created a whole stack of fields on the opportunity. So you end up with a page kind of this long. They've got a whole sort of fields. In fact, in this case, I think this is just the start of it. This is to track revenue over time. And the page goes on and on to capture the different products and services that we sell. And I think this is the sort of thing you see quite often. Nick and I were with a customer only yesterday, and they also have revenue that they attract over time from one opportunity, and they've created one opportunity per quarter. Yeah. So again, it's a, what's the technical word? A hodgepodge of information and so on the reports.
Yeah, I mean, I think with the page layout we're looking at the moment, one of the other issues you find over time is that obviously when we move past 2016, those fields are no longer relevant. So we're continually creating new fields. Data is not stored in a way that we can quite easily report on and summarize and compare from year to year.
Yeah, absolutely. This is I've just cut over from the slides to Salesforce. And this is an opportunity, and you can see here that we have much less information on the opportunity. We can see that this particular deal is worth $74,000. But where are all of those fields? Well, really, all of the fields are here, stored on these products. So we've now got some insight about this particular opportunity. We can see these specific products that we're selling. We can see the products that we can see the product families that they belong to. We can see things like the list price, the sales price, the quantity, and so on and so forth. In fact, we've even added some margin figures to that. So immediately we've cut down the size of the layout and just made the system. We've made the system a bit more usable, but we've also generated additional insight into this opportunity. So a manager now can see much more, can take a much more analytical view to what this opportunity is about. You might be wondering, well, hold on the previous screen we also had a lot of fields for revenue over time. Haven't forgotten that. You can't see on this page. We are going to come to that very issue about what do you do about revenue that accrues over time. So we're going to come to that. So using products makes the system more usable, improves user adoption. One piece of standard functionality that I think we would both concur is not fantastic is this button here. So I've got my opportunity. Well, how do I add products to that opportunity? And the way that I do that is using this button here. And I think in this particular instance we have only got we've got 67 products in this system, not the 5 or 7,000 or whatever it is that Robby has got. But you can already see it's quite difficult. There's a kind of rather stringent search facility at the top. It's not the easiest way to find products. So an option and is to override that feature and just to use something like this. Now, this is an app that we've built and which we sell via our website, but let me show you what this does. It's exactly the same functionality, but this time we are grouping the products, in this case, into product families and also subfamilies. So now we can start to go through and add products to this opportunity. You notice over here on the right we have a running total of the total value of products on this opportunity. We have a list of the products. We can modify the quantity and change the value. We can put in a discount and so on and apply that. And it's really just a much easier way on the eye of choosing the different products that you might want to apply to. We've even got planes. Look. Yeah, I love a helicopter.
I think two benefits of the product wizard really are, from a usability point of view, it's a lot faster, both in identifying and adding products to the opportunity. But the second benefit is the ability to update key fields such as the quantity or the sale price or the discount, and that immediately reflects on the bottom right hand corner there in the total box. So any of the changes that our sales reps are making to the product selection and those key fields, we're able to see the impact of that on the total opportunity value immediately.
Robby, your team is quite a significant user of this feature. What do you have any observations, or what's the feedback from your guys on this?
It's actually been great for us. We switched machine tool builders a year or so ago, and so the guys weren't as familiar with the machines and the options on the new lines that we picked up. And so we searched for ways to make it easier for them to build their quotes and build their configuration of the machine and the options. And, there are some free apps on the App Exchange, and, we tried different things. And, when I found your product wizard, I knew that was exactly what we were looking for, because, like you said, we can break out the products, into different families so that our sales guys can just go in, pick their machines, and they can look through the different product families for options, select them. They've got an opportunity created with, they can already see their margin, their gross profit, total selling price.
Yeah.
And then they're creating quotes in minutes in the field.
Mm-hmm. Mm-hmm. And presumably your guys, your sales guys they're sort of quasi engineers, so they sort of know what goes together. They know if I select one of these, I've got to have some implementation services or whatever it might be, because there are a lot of configurators on the market. But very often I find that actually salespeople, they're quite technical. They know the products, they know what goes together. It's just a question of being able to find them.
Correct. And then it's an easy way for us to add, we've added options and we've added freight. And so we added all those line items so they can actually add product on the fly that's not even in the price book by using an option. They can add freight and just get a more accurate margin for their opportunity. Yeah,
indeed. And I know one of the features you like of this, Robby, is just the ability to search for different, a more sort of powerful search facility as well. So that's an extra feature.
Yeah, that's a really nice feature when you've got 100, 150 options that you're looking at.
Yeah, absolutely. And what it does is it takes those products and adds them to the opportunity in the 100% standard way. You use the word margin there, Robby, as well. Do you pull the margin through, or the gross profit through, onto the opportunity line item?
We do. We actually show the margin of the line, but then we roll it up like you have to the in the opportunity header.
Yeah.
We have calculated fields that feed off of the product line items.
Yeah, absolutely. And again, this is quite a common thing. If you're using, we might know that the value of this opportunity is $74,000, but in many businesses, either you want to know the margin, or in fact, in many businesses, salespeople are commissioned, they're targeted on margin or GP rather than the actual gross value of the deal.
Yeah.
So
yeah, and that's how our guys are.
Yeah, and that's pretty common, I think, Robby. And what we've done here is take quite a simple approach. We took each product and we gave it, it's obviously got a price, and we're going to come to pricing and so on in a little while, but it's obviously got a price, and we put a field on there for cost as well, and we really, the cost of each line item is really the margin is the quantity times the cost minus the total price for that line item, and then we're rolling that up. I think, Robby, am I right in saying you take a slightly more sophisticated approach by putting it on the price book, what would technically be called the price book entry, or do you do it on the product?
We do. We use the list price from the product to flow into the price book entries, but with the cost or dealer net, we actually have it on the price book entry items.
Okay.
So it's actually a custom field. And I think that custom fields for price book entries came out a few releases ago, which is a really nice item, an option to be able to do that.
Yeah.
I actually added, most of our machines have a certain margin from our distributor, and then the options have a separate margin. And I actually load that percentage in, and to have a field that checks sort of a checking to see that my margin or cost that I uploaded matches. So it's kind of nice. You can do some things like that with the custom fields.
Yeah. I mean, I think the other advantage as well is if, for example, if you're manufacturing in multiple countries or, multiple currencies at least, that, putting the cost price on the price book entry allows you to account for, different cost base, whether it's manufactured in one country or another.
If you're listening and you're not sure what a price book entry is, don't worry. We will explain that in the blog post tomorrow. But basically, and we are going to come to price books and so on in just 1 second. So it'll make a bit more sense in just a second as well. But the key message is really you've got a revenue figure and you're pulling through a cost figure, and therefore you've got a margin figure as well. And one of the other benefits of using products, if I just can find my slide again. This is the revenue report. This is the pipeline report that the customer. So that's how they're capturing the information about each opportunity, and that's actually a direct screenshot of their revenue report as well. And you can see there just how difficult that is to kind of make sense of the amount of revenue that they are generating over time. Well, one of the benefits of using products and products associated with opportunities is you can get much more visibility of your revenue and your pipeline, your committed pipeline and so on. People, if you've been on a webinar with me before, you'll have seen me talk about this chart quite a lot. That's the total gross value of the opportunity. But now we can break the same chart down by product family. Think about product category, if you like. So we can see how much revenue, how much pipeline we've got in this case by individual product family. Excuse me. And we've got we can see that over time, but we can see the total pipeline as well, broken down by different product families. So, so really, you're starting to get much more visibility of pipeline revenue and committed revenue. Just whilst I am on this dashboard, let's just talk about these two charts here as well, because to my mind this is another benefit. This is a way of getting much more insight into salesperson performance and so on. So it's quite common to have a chart like this which shows average deal size, let's say over the course of the financial year or this quarter, whatever it might be. So this is the average deal size by salesperson, and you can see that one person has a much higher average deal size than his colleagues. Now that's okay, but how do you use that information for coaching and for management purposes and so on? Well, the chart underneath gives you a bit more visibility of that, because you can see the ratio of different types of products between salespersons. So you can see here that Dave has a much greater proportion of optional product sales than the other guys. So in other words, when you're selling something, you might have a core product. We took all of the products and we called some of them core products, some of them as optional products, and some of them as service products. And you can see that the ratio of Dave's optional products to his core products is much greater, and that accounts for his increase in average deal size compared to his peers. In fact, you might, looking at this, I haven't really thought about this before, but looking at this, you might say, well, actually, Dave, you could be doing even more if you were selling more service-related products, and Andy, you need to sell more optional products and more service products as well. But again, it's giving you much more insight into salesperson performance, and of course you can summarize this at the company level, regional, team, territory level, and so on as well. So Robby started talking about price books and so on. Robby, I'm going to ask you just in a second just to comment a little bit more about how price books are used in your business, because you have quite an interesting way of doing it. But let me just explain about price books in general. You can see here that on this opportunity we are using the strategic price book. So think of a price book as being a group of products, and all of those products have a price. Now, an example of how you might use a price book is, For example, if you're selling something in the UK for £1,000, the dollar equivalent of £1,000 is, I guess at the moment, it's about $1,200, roundabout. For the argument's sake, it's about $1,200. It's actually probably about 1,200 euros as well, something like that. So obviously there's a conversion value there as well. But you might choose to sell that product in the United States for $1,400 or perhaps $900. And that might reflect what the market will bear. It might reflect shipping costs, transactional costs, and so on. £1,000 is roughly 1,200 euros. You might choose to sell it for 1,600 euros in Europe because perhaps the market will bear more. That's one example of the way that you would use price books. Another example would be, let's say you've got a small group of customers that are strategic customers. You might even have one customer that you've got a strategic arrangement with on pricing. So you could even have a price book specifically for Borrowdale hotels because they get 10% off everything compared to everybody else. You might have a not-for-profit price book, and so they maybe pay £900 for that same product and so on. Does that make sense?
Yeah, I mean it's quite a common approach where you have distribution or various distribution channels, and those distribution channels reflect the size of the customer. Be it a retailer versus a wholesaler, for example. So you may have a wholesaler price book versus a retailer price book.
Absolutely, absolutely. And Robby, let me just bring you in here because I've explained there conceptually how price books, and you referred to price book entries a little while ago, so that £1,000 or that $1,200 will be a price book entry. But just give us some insight, Robby, on how price books are used in your business.
Well, since we have so many different models of machines and there's so many different options that are available to those models, a rules-based configurator was really overkill for what we needed. And I mean, they're just so expensive to implement and set up and maintain. We were able to use the product wizard sort of as a mini configurator. So what we did was created a price book per model of machines and then only added the options that are available to that machine to that price book. So now when our salesmen are creating an opportunity, they select the price book, which is the machine, and then when they use the product wizard, they have the 2 or 3 machines that are available and then all the options that will fit and work on that machine. So we know everything they add to the opportunity will fit the machine and can be ordered. So it makes it a lot less error prone, and which, we have had times where when someone orders the wrong option for a machine, everything has to be at the customer's before the machine can be installed.
Yeah.
Well, you find out, that you get an option there that doesn't fit. Well, then you've got to send it back and wait and have that cost of shipping, and the customer's got to wait another 2 or 3 weeks to get their machine installed. So it's really helped us to do it that way.
Yeah. Yeah, and it's quite an interesting use of price books. What would happen? Would you have the situation where on one opportunity, what would you do if you were selling 2 machines, or would that situation not normally arise in your business?
It actually does from time to time. If the machines are the same model, the exact same machine, then they would add them to an opportunity. Different models, they would create a separate opportunity.
Yeah, and your machines are quite high, and that they are. I was going to use the word expensive. That's probably not the right word, but they are a few $100,000 anyway per machine. Is that right?
Capital.
Yeah, they could. Yeah.
Yeah. We have a customer that uses, I'm going to come to the whole subject of approvals for discounts and so on in a minute or two, but we have several customers who use the approval process around the opportunity, actually not really for pricing approval. They use it for what you might call technical approval, to make sure that the salesperson has added all of the relevant products to the opportunity, so it goes through a technical review before the quote goes out. That's the sort of thing is quite common. So another app that we have developed to make things a bit easier is if I go to this account, you see this opportunity has the strategic price book, and we have an app that you can purchase for around $700, and what it does is it puts this pick list in on the opportunity, and you match the pick list to be your to be the same values as your price books, and for this account you'd always get the relevant price book assigned to that opportunity. So we can change that, and you can set that on an account basis, and when we create that opportunity, then it will inherit the price book for not-for-profit in this particular case. So so again, there are ways. Price books you don't have to be using price books if you don't have that price variation, or you don't have the situation that Robby described. If you are using price books, then again there are further ways to adapt it and to further customize it to your business. Let's go to this thorny subject of revenue over time. We touched on it a few minutes ago on different ways people do that, through creating a whole stack of fields and so on. But I think this is I think it's quite common. It's certainly common, obviously, if you're selling a service contract, then you are definitely going to get that revenue over time. If you're selling machine tools like Robby, then there's going to be, I presume, Robby, people don't pay for the whole thing up front. There's a kind of schedule of payments.
Yeah, we usually, most of our standard terms are going to be 20-70-10, which is 20 at order, 70 delivered, and 10% when installed. Yeah. But that invoicing and that is done through our ERP system, so it's not captured. We have some fields in the opportunity for milestones where they can record, when the invoicing is happening and things like that. But it's all taken care of through our ERP. Sure.
We have quite a few customers who track that revenue because they want to understand what the pipeline looks like in terms of that scheduled revenue, or even the committed revenue. They want to understand what it looks like. Now, that sort of thing happens, as I say, if you're selling a service contract, you're going to get the revenue over time. But it very happens, in fact, we had this situation yesterday, in which when the opportunity is won, when the deal is won, then actually at that point in time, no money changes hands. It's really an agreement to do business. And then the customer orders, they order the consumables or the transactional items or whatever it is they're ordering, and they either do that through an ERP system, through the portal of an ERP system, or they ring up and place orders and so on. However, when you've got the opportunity, you're saying, well, I think the value of this opportunity over the course of a year is £12,000, let's say, or $12,000 or whatever, and I want to predict what that customer will order on a regular basis. I'm just going to show you how that works. I'm going to show you the standard way that sort of thing works in Salesforce at the moment. So I have an opportunity here. In fact, let's just do it on this line item here. So there's a standard feature called schedules, revenue schedules and quantity schedules. Let's just do the revenue schedule bit here. But we might say, well, this line item, this it's a service contract, let's say. In fact, this one is a 2-year service contract. So down at the bottom of this line item, I've got this bit called schedule, and I have a button here called establish. So now I can say, well, okay, when do I think that this revenue is going to start to flow? And it might not be the close date. It might not be the close date. It might be after the close date. So I can put in a date for that. Let's just say the revenue is going to start on the 1st of June, for example. This $2,000, am I going to divide it, or is it $2,000 every month? Well, let's just say it's we're going to divide it. How often are we getting that revenue? We are getting it monthly, let's say, and I think it said it's 2 years, so we'll put in 24 months. Click save. And here it's taken my $2,000 and it's divided it by 24. Let's put a date field here down on the left hand side. So when I click save, I've now got a revenue schedule associated with that opportunity line item. So when I go back to my opportunity, I'd already done it for these others, but I've now got a piece of scheduled revenue associated with that. Now what does that mean? Well, one thing it means is that when I go to my dashboard, I'm going to scroll down here a bit, this dashboard chart here is showing me my, we've called it committed scheduled revenue, really close run opportunities. So this is saying when I amalgamate all of those schedules together from the different opportunity line items, different opportunities, this is what my revenue is going to look like. And the chart below says, let's take that exact same piece of information, but this time for pipeline opportunities only. So not yet won, they're in the pipeline. And again, we can see the flow of scheduled revenue over time for, let's say, this financial year or whatever it might be. Nick, how would you deal with a situation where that was a nice easy one, because we just divided by 2,000 by 24. What happens if it's different and it's consumables and so on, and the customer, sometimes they order $83 worth, sometimes it's 90, sometimes it's 200, sometimes it's only 10. How would you, what would you do about that?
Sure. Yeah, well, I mean, I think one of the ideal things about the schedules is the flexibility with it. So it gives you the ability to update the individual schedule, both in this case on the revenue amount, but also the date as well. So for example, if the payment received on the 1st of June, if that was to say, be an upside, take Robby's example, where it might be a 20/70/10 split, we might take $1,000.
So that's based on the actual.
Yeah, exactly. So it's based on the actual.
Because it might be, to keep it in scale, it might be $100, and this might be
drop down
70, and then next month it might be 80, and obviously it's a bit laborious. I would accept that using the standard functionality. It's a bit laborious, but you can keep a running total there of your actual, and you can modify this and say, well, actually next month I reckon we'll only get about $60 worth, and you can save that, and it will adjust your schedule, it will adjust the value of your opportunity, and keep it all in sync. So that's the standard way to do that. I guess in quite a number of cases we've replaced that with a custom build. I know you have. In which we actually make it a little bit more flexible, and you have a visual force page rather than that standard functionality. But really, because ideally what you'd like to do, there's 10 line items on this opportunity, so ideally you need an easier page. So quite often we replace that standard schedule functionality with a custom feature and a visual force match, just to make the whole thing a lot easier.
Yeah, and I mean, I think the one advantage of doing it that way is we can set those default values as well. So quite often, well, with the standard schedule functionality, the schedules are split out evenly over the number of periods, whereas with a custom schedule solution you can define how much you'd like in the first, second, third, fourth, and so on. So it just gives you that flexibility to reflect how the reality of the business.
Yeah. And I actually made a mistake earlier on, because when we were talking about what we call the auto price book selector, and I said it was $700. It's not $700. For choosing the actual price book that goes with the opportunity, it's not $700. It's free. You can download it for free from the App Exchange. And what I was confusing it with is an app we do have for $700, in which when I change my close date using the standard feature, I've got to go modify all of the scheduled dates for this for each line item as well, which is a pain in the tail. So we have a small app in which we can change the close date of that opportunity, and it will go and shift the scheduled date for those for that revenue or quantity schedules at the same time. So once you've established the schedule, then it will keep it in line with the close date as the close date evolves over time. So that's the one I was referring to for $700 earlier on. But a lot of companies like Robby you can either do that in the finance system or in Salesforce. So very quickly, let's just talk about streamlining the process. Robby, in your business, how do the guys get a physical quote out to the customer? They've gone through the process of adding products and so on. What do they do next?
We actually use the quote feature of Salesforce.
Okay.
So they'll actually, in the field, creating their opportunity with their products, and then they will turn that into a quote. And they've got leeway. You know, they know what margin they need, and they, you know, especially the senior sales, and they can actually, we've got several different templates that we created, the quote templates, and they can print one off or electronic and get a customer to sign it. I mean, we've had guys that actually just make a sales call and end up that day getting a signed order contract. Yeah. By being able to just generate everything so quickly. Yeah.
You're I don't know if you can see the screen as I was just clicking on it whilst you were discussing with it, but I think the feature you're talking about is this one here. So basically, if I just go back to the opportunity and just explain. So here's our opportunity. We've got some products. What I could have done is gone to the quote first, but I'm going to the quote after I've already added the products. I can add products to the quote in exactly the same way as I can add them to an opportunity. So let's just call this example 2 for the sake of argument, just for speed. Let me save that. So now we've got a quote, and the quote has inherited some information about the opportunity, you know, about the customer, and it's inherited the products. I might want to change those things. So you could have Robby, in your business, there could be several quotes with one opportunity?
Correct. What we do is basically we use the quote. We call it an order contract. We renamed it. And basically it's a snapshot of the opportunity at that point in time. So we have our users make all their changes on the opportunity side as far as adding new product, making price changes. Okay. And then they generate a new quote record and work from there. Yeah. So we basically use it as a snapshot, and then we use the document generator to create the different documents.
Yeah. So you could have multiple quotes on the opportunity. The customer's not going to buy both quotes; they're mutually exclusive. True. But I can say, well, this is the most likely quote that they're going to buy, and I can do that by syncing my quote to this set of products to the opportunity. And the button that, or the PDF that Robby was referring to, is this button here. It's a standard button in Salesforce, and when I click that button, you can see it's pulled in our logo, our details, and so on, and the customer details, and it's pulled in the products. So an advantage of using products is if you've got to send this sort of thing out to the customer, it is just, well, it's doing it for you. It's a heck of a lot easier. What about things like electronic signature and so on, Nick?
Yes, I mean, well, depending on the complexity of the quotes, you can use standard Salesforce quotes and documents, or particularly use something like a Conga. Yeah. If your documents and contracts are slightly more complicated. Mm-hmm. But and then again, extending that, there's a range of electronic signature applications available that integrate quite easily with Salesforce. So DocuSign, EchoSign. And it just enables you to send that PDF off to a customer, and they can obviously sign that electronically by clicking on the document, and getting that back to you literally in a matter of seconds of sending the email if they're as responsive as you would hope.
Yeah. And as Robby says, I think your example, Robby, was you actually had somebody in an office who printed it out there and then got onto Salesforce, presumably in the customer's office, and did it all.
Yeah, they can do that, or they can just email it to the customer in the field, and get the customer to sign it however they sign their documents and send it back. Yeah. So in our list of benefits, we had close deals more quickly. Well,
this is one way to do it. You've got all the products, you've got the accurate pricing, you might have the pricing approved. We haven't really gone into approval processes and so on, but if I just go back to my opportunity here, you can see I think you'd have a fit, Robby, if it really was 56.7% discount, but let's go with it anyway on this opportunity. And so we've calculated the discount from the list price and so on, and that's the total. You know, the total discount on this opportunity is $42,497. So we know what the discount is. We know what the discount is as a percentage of the total, and we've got some approvals functionality here. So we've just built a simple approval process in which you can have a way for salespeople to get validation, to get approval on those discounts. Again, you know, strictly speaking, you don't have to be using products to do this. But if I just put the gross number in and put in what I think is the margin, then as a manager, kind of what is it I'm approving? I want to be able to see all of this information. I want to be able to see the discounts by individual line item and so on. You can see that's been sent for approval. If I just flick over to Firefox, then you'll see that here's my manager logged in, and I could go and scrutinize the opportunity. I've got a chatter poster to look at it. I've got a new task to go and review and approve or reject this this opportunity. So let's go and just quickly approve it and refresh as the sales guy, and now I've got an audit trail of approval of that discount and so on. So again, you know, getting rid of all of the emails and ad hoc discussion that go flying around with this sort of thing. Robby, do you have any other ways that processes get streamlined? You've got the order. What happens to all of the detail about the order and the quote? Are there any other examples you have where you are streamlining the sales process or the fulfillment process?
Definitely with the fulfillment. Now that we have the products, several, you know, all of the options listed on the opportunity now, we actually have the different delivery dates and estimated delivery dates. Like I said earlier, you know, all the options usually need to be at the customer with the machine for the installation. So now we can track and actually have an individual, you know, delivery date, shipping information for each line item, so someone can see, hey, everything's already there but the chip conveyor, or everything's coming, or the transformer's not there yet. And it makes it, you know, easier to schedule our service guys to go out and install the machines because you know when all the items are supposed to be at the customer.
Yeah. Yeah. So you're putting in much more rigor to the salesperson up front.
Well, what after the salesman's done his part, then we have internal advocates who they're in each territory or each regional office, and then they will start handling, you know, the ordering of and the POs and, and that type, the generation of all that, and they're the ones that are kind of tracking the delivery dates and the freight and rigging and truckers and things like that.
Yeah, yeah.
But then the sales guy has that look into that. You know, he can see, you know, as that's going in, and because, you know, I think they're paid after the invoice, the machine's installed is when they get their revenue. So, you know, they can see, you know, why haven't I gotten paid yet? Oh, the transformer hasn't showed up.
Yeah.
So,
yeah. And was there any kind of, because in a way you're asking the sales guys to do more work up front by adding products carefully in the right quantities and so on. Was there any kind of resistance to that? Any user adoption issues that you had to deal with for that?
There's been some. What the guys used to do, or our salespeople used to do, was we had an Excel spreadsheet that actually had all of that information, the machine and the options, and a lot of them were some of the sales guys were typing that in or taking a quote from our builder and copying and pasting that, and they were having to do a lot of that on their own, or someone inside internally do that for them. So those guys really took to this new system and the product wizard, and and they really like it. And the funny thing is the office that I originally was hired to work for, that was purchased by Ellison, they're the ones that don't want to use it. They have their own internal sort of pre-sales engineer, and their sales guys, everything goes through him, and those guys just add one line item of the machine, and then they then make a task for the internal guy to start doing the quotes.
Yeah.
But every other office, we've got like 70% of the U.S. They love it.
Yeah. And the thing is, I mean, it's the sales guy who's actually with the customer discussing it and really has the first-hand knowledge of what was discussed, what was agreed, and really what the customer needs.
Right. And one thing we'd like to do, and we can talk offline maybe, is we'd like to eventually have maybe this web-facing, where on our website, of course they wouldn't see, pricing and margin and things like that, or they could see MSRP, but just a way for a customer to actually go in and build a little quote and send it in.
Mm-hmm. Yeah, indeed. And you can imagine how you could do that through a community, Salesforce community. So they're getting controlled access to data that you hold about them in Salesforce, about your products and so on. Yeah, absolutely.
Right.
I just want to finish on one final thing. Let me let's just have a look at this button here, because very often people are selling bundles of products. So you're not just selling. The product wizard allows you to choose multiple products, but what happens when you are selling bundles? Well, we have a button here, and when I click that button, you can see I have different categories of bundle, and when I click on the individual bundle, I can see the products that make up that individual bundle. So I can see the individual products. Excuse me. I can see the individual products. I can see the quantity that the administrator or the bundle manager, the product manager, has decided for that bundle, and so on. So I can choose my bundle. I can go, and as a salesperson, if I need to say, well, actually in this case I don't need 2, I need 4 of those, and I can add that to the opportunity in the normal way. So we have quite a few customers doing this sort of thing, where either they're selling bundles, technical combinations of products that fit together in the bundle, or they're using it for promotional reasons as well. So they might have a spring bundle, a summer bundle, and different permutations, and so on. So again, it does exactly the same thing, adds those individual line items to the opportunity, or the quote as well, if you're using quotes. So Ben, I know you have been waving at me. There's do you want to pick out a couple of questions that people have asked?
Yeah, we've got a few that have come in. The first one is, what happens when the price of a product changes? Okay.
Do you want to cover that?
Yeah, sure. So when the price of a product changes, what we do is we go into, well, we can do it on this opportunity here if we want. So we edit our opportunity product.
Someone's got a schedule associated with it.
Okay.
So let's go back to the schedule. So in this particular case, we need to, it depends what you're doing really, whether you want to modify the schedule or whether you want to change the price completely. We can delete the schedule. We can't delete the price at that point because the price is locked to a schedule. But what I think you were going to say,
yes,
you can modify in that.
Yeah, so we go in and we modify our sales price for a given product. So I don't know, $2,500 in this case. So what that'll do is, take our new price, look at the quantity for that individual product, and give us a new total price for that line item. Gary's just very kindly updating my schedules for me. And that change in price will also be reflected on the total opportunity value as well. So, again, another advantage of using products is any change to pricing on a, be it one or multiple products, it's automatically reflected in the total value of the opportunity as well.
So you can modify it at the individual opportunity level. If the price of a product changes, so your list price changes, that will not update automatically of the opportunities that have that product. You have to go and do that manually in the way that
Sure.
Nick just described. So changing the price going forward will not impact historic opportunities.
Okay. Secondly, is there a way to measure products against targets?
Okay. And Robby, were you going to just add something to that just before I answer the other?
I was just saying that if you're using the price books and you're pulling in the standard list price for the product, that when you change it on that one product, it'll update, in all the price books that it's set to use as a standard, which is nice.
Yeah, absolutely. And Ben, your second question was about targets, I think.
Yes.
Can you link products to targets?
Yeah, measuring products against targets.
Yeah, I know what you're talking about here. There is a way in Salesforce to have targets represented as a tab, as a custom tab in the system, and to have each salesperson have a target and to link this amount and this opportunity to the relevant target. Yeah, absolutely. You can have individual targets for salespeople. That might be by product category, for example, and you can link the value of each line item to the separate to the relevant target for each product. Yeah.
And finally, can the margin and cost vary by price book?
Yes, and in fact, yes, absolutely. And in actual fact, that's to a large extent what Robby was talking about earlier on. You might have different price books, and if the cost of fulfillment in the US is different to the UK, then you could have a different cost for that product, and you'd have a different price for that. And technically, you do it on something called the price book entry is where you would do that. We're done?
Yep.
Several things by way of closing. We will, as I say, publish in a blog post and the webinar recording on what is our time Friday morning. For example, in Robby's time, I think will be middle of the night. So we'll send out an email during the day on Friday to publicise that. So check out the blog post. For everybody who is attending the webinar, we will offer a free 30-minute web meeting, web consultation with you, just to help you get things set up and so on, just to go through products and price books and so on in a bit more detail in your business. So get in touch with that. Just go to our Contact Us page on our website to do that. Ben, everybody can't see him, but Ben, thanks for your help in organising the webinar.
No problem.
Nick, thanks for your help today. Robby, great effort. Thank you. Thanks for coming on the webinar.
No problem. Glad to be here. Thanks.
Yeah. And for everybody watching, hope that's been useful to you. That's it for today. Thank you very much indeed. Have a great day.